nka di mepene le buka mathata a lefatshe a hlaba sa mutla ka le nna o mantsibeng wa letsatsi la ka jana ke re fela ngwana sekolo hle o ko dule peneng le buka o shebe dintho tsa sekolo e re bea fela metsetsong e mmedi ka morora ya botshelela tsatsing la ka jana ke na le Dr. Del Lange o utlwile he o tlo rotla ka thuto fela ka thuto ya accounting se
that's correct, yes.
Accounting. So allow me to give you this opportunity so that you can continue with the subject accounting.
Thank you very much. Good evening, grade 12 accounting learners. Once again, I'm Dr. De Lange, Deputy Principal at Sasolburg High School, and I'm teaching accounting there. Today's topic is the cash flow statement, as well as some of the ratios, if I get to that, if the time doesn't run out. I'll be explaining the cash flow and thereafter do a question regarding the cash flow statement. There will be another lesson on the cash flow during this series. So I think it's the last lesson on the 8th of May. So please join us then as well. The resource that we will be again using is Mind the Gap, as well as the Free State June 2019 paper question 4. Again, for the Gauteng learners, Mind the Gap is available on the website of the Department of Basic Education. The Free State learners, you already have Mind the Gap. Once again, the Gauteng learners, you should ask your teachers to send the Free State June 2019 paper. I'm first focusing on the cash flow statement, so please turn your Mind the Gap to page 40. But before I do that, I just want to give a bit of a background regarding the cash flow statement, because that is the one aspect where you really don't study. It's a study sector. So please study this cash flow statement. It counts a lot of marks. Now, the cash flow statement is part of financial accounting, together with the income statement, the balance sheet notes, as well as the analysis and interpretation, that is the ratios. That forms part of paper 1. While the examiners will sometimes ask you to complete the cash flow statement, calculate some figures like the tax paid, and prepare some parts of the cash flow statement. In the past, trend shows that it's seldom that you will be asked to do the full cash flow statement. So it's not necessarily that they have to ask the full cash flow statement. They can ask some parts of the cash flow statement. Now, the cash flow statement requires good knowledge and understanding of the principles of inflow and outflow. It's all about the money, the cash that comes in and the cash that went out. Now, the knowledge of a company as a form of ownership is important to understand the changes from other forms. Remember, it's the first time that you are doing a cash flow statement. And you should know the income statement as well as the balance sheet, because you will get your information from those two. Now, the layout of a cash flow statement. Now, there's 4 parts that I'm doing, and I will explain each one separately. First of all, you get operating activities. Then the second part, investing activities. The third part, financing activities, and altogether it's a net change in cash and cash equivalents, because you want to find out what is the cash flow for the year. Now, first of all, what is a cash flow statement? Now, a cash flow statement is one of the 3 key financial statements. Remember, you get the income statement, you get a balance sheet, and now in grade 12 companies, you get a cash flow statement. Now, the cash flow acts as the bridge between the income statement as well as the balance sheet by showing how money moved in and out of the business. Again, it's a bridge between the income statement and the balance sheet, and it shows how money moved in and out of the business, or in the company in this case. Now, the cash flow. You are going to work with the following. Cash inflow is money coming into the business or the company. This amount does not have brackets because it's a positive amount. Cash outflow, money go out of the business. This has brackets. For example, fixed asset that's bought for cash. Remember, it's only the cash that we're looking for. All the information needed for cash flow statement and the notes can be found on the income statement, as I said, the balance sheet, as well as the notes. Again, you have to know the format of the cash flow statement. You get an income statement with 2 notes, remember, that I did last week. You get a balance sheet with 7 notes. And now you get a cash flow statement with 5 notes. So there's a lot of studying work to do in the exam. You should know the format of the income statement as well as the 2 notes. You should know the format of the balance sheet as well as the 7 notes. And now you need to know the cash flow as well as the 5 notes regarding the cash flow. Now, the first one. I'm first going to do all 5 the notes. And then I'm going to explain the cash flow as it is. Now, note number 1, very, very important. They can ask you to do the full note or some parts of the note. You have to read the note instruction because note number 1 says reconciliation between profit before tax and cash generated from operations. Now, there's 2 parts there. Reconciliation between profit before tax, that's the first part. And the cash generated from operations, that's the second part. So, again, they can ask the full note or some parts of the notes. Now, number 1, you always start with profit before tax. Now, where are you going to get this information from? Profit before tax will be given to you in the income statement. Well, they can give you profit after tax as well as the income tax for the year, and then you should work backwards. So, profit before tax is very important, and you will get that again in the income statement. Make sure you use the profit before tax. And again, remember to add back the tax if they give you profit after tax. Then there are 2 adjustments that you need to add back. Number 1 is depreciation. The reason why we add back depreciation is because it's a non-cash transaction. Remember in grade 10 you did the general journal, and the general journal is therefore for non-cash transactions. And the same with this. You have to add it back because it's not cash. Remember, it's not like you are going to pay for the depreciation out of your own pocket. Therefore, add it back. The interest expense is also added back because interest will be shown somewhere else in the cash flow. Otherwise, it's going to be double counting. So, if we take the profit before tax, you're going to add the depreciation. You're going to add the interest expense. And then the answer, and if you have a highlighter or a pen, then highlight operating profit before changes in working capital. That is a subtotal. And they can ask you only to work it up to that point. So, profit before tax plus depreciation plus interest expense gives you operating profit before changes in working capital. And all this information you will find in the income statement. Then changes in working capital. As I said on Wednesday, working capital is your current assets minus your current liabilities. So that means you want to find out what is the working capital for your assets and your liabilities. Now, they will provide you with a balance sheet for 2 years. Very, very important. So, let's say they will give you figures for 2020 and figures for 2019. And then you should calculate what is the movement between the 2 years. And there are 3 components regarding working capital. It is your inventory, it's your debtors, and it is your creditors. Now, if I take your inventory, and remember, you will get this information in the balance sheet as well as in the balance sheet notes. Let's take inventory. I'm going to give an example, and now you have to listen very carefully. Let's say of your inventory shows 80,000 rand. So the inventory shows 80,000 rand in 2020. In 2019, it shows 60,000 rand. So in 2019, it shows 60,000 rand. So the difference between the two is then 20,000 rand. It moved from 2019 from 60,000 to 80,000. So there will be an increase in the trading stock. But what happened to the money? Your money decreased. So hopefully you understand, if there's an increase in assets, it will always be shown in brackets because your money went out of your company. So an asset, that now is the inventories and the debtors, it counts for the same because inventories and debtors are both assets. So an increase in an asset is negative. Then if I go to your creditors, and I'm going to use again an example. If the creditors was in 2020 100,000, and in 2019 it was 120,000. So in 2019 it was 120, and then in 2020 it was 100. That means your creditors decrease. But what happened to your money? There was an outflow. So a decrease in creditors will always be negative and in brackets because it is an outflow of money. There are three things that you're going to exclude from the working capital, and that is your income tax, that's your dividends, and your accrued interest. The reason being is income tax and your dividends will be shown in a separate note. Income tax paid will be note number 4, and your dividends paid will be in note number 3. Otherwise, it's going to be double counting again. So if you have your changes in working capital and you've got your operating profit before changes in working capital, you can get the answer cash generated from operations, and that answer goes to your cash flow. Note number 2 is the easiest one, and you always struggle with that. Now, you will get your information from note number 6 in the balance sheet, that is your cash and cash equivalents. It goes together with note number 2 of the cash flow statement. So note number 6 in the balance sheet, cash and cash equivalents, goes with note number 2 in your cash flow statement. Now if you look there in note number 2, and I'm going to just do bank there, and then you will see if bank in 2011 is 10,040 rand, and in 2012 it's 35,300. That means the money moved from 10,040 to 35,300 rand. So the net change there in the example is 25,260 positive. I will do later when we get to the question when bank is in overdraft. Then you will see there's a opposite of that. Note number 3, it is dividends paid. Now, where are you going to get your information from? You will get your information from the current liabilities in your balance sheet. That is the shareholders for dividends. So again, you will get your information from shareholders for dividends in the current liabilities, as well as in the retained income note, note number 8. So, first of all, note number 3 starts with total dividends for the year. Remember, you get 2 types of dividends, an interim dividend and a final dividend. The final dividend is easy to get because that is your shareholders for dividends at the end of the year that is declared. And because the total dividends for the year is interim and final, it should always be shown in brackets because that is what you owe. Now, then the second step is the amount due at the beginning of the year. Remember, it's the amount that comes from last year, but what did you do? You owed them last year, né? So what did you do? You've paid them. So therefore there's a outflow of money, therefore it will always be in brackets. So the amount due at the beginning of the year comes from last year's amount, and it will always be shown in brackets because that's the amount that you have paid during this year. And then the amount due at the end of the year. Remember, that's the amount that you have calculated for the final dividend. But when are you going to pay that? You're only going to pay that next year. So therefore, it is positive because you will only pay it next year. So it's always negative, negative, positive, and then you will get a negative answer because it's dividends paid. So the dividends paid will then go to the cash flow statement itself. Then the tax paid. You start with the total tax for the year. Remember, that's the amount that you owe. We didn't say you've paid that yet. That's the total that you owe, and you will find that in the income statement. Always remember that. So the total tax for the year is what you are due. Not that you paid, you still owe that money. So therefore it is negative. Then you get the income tax in 2 places. Either in the trade and receivables or the trade and payables. So if the amount at the beginning of the year comes from the trade and receivables, remember, beginning of the year is from last year. So if you start with a debit, that means you will have a positive amount because the South African Revenue Service owe you that money. So it's obviously positive, the money came in. But if it was in the payables from the previous year, at the beginning of the year, that is the amount that you've paid. Therefore, it's going to decrease the tax paid. So it's going to be negative because it went out of your company. Then, the balance due at the end of the year. If it's a debtor, a trade debtor amount, if you find that in the trade debtors, then that amount is going to be negative. So a debit means it's a negative because you will only receive that money next year. But if it's a trade creditor, it will be positive because when are you going to pay that money? Next year. So the last amount, if you take the 3 amounts, that will go then to the cash flow statement, and it will be negative because it's the tax paid. Very important, you've paid it, so it's going to be negative. Then the last note, note number 5. It goes always with the lovely note number 3 of your balance sheet, and that is your assets. Now, note number 5 is all about assets bought. So you want to find out what is the value of the assets that you have bought. Now, sometimes they will provide you with the figure, sometimes not, and then you have to go calculate that. But I want to teach you a formula if you want to find out what is the value of the assets bought if they give you the carry value. So if they give you all the assets together, then there's a certain formula. Now, my formula is as follows. You take your fixed assets for the end of this year. So please write the formula down. You're going to take your fixed asset at this year's ending of the year. Then you're going to add your depreciation that you will find in the income statement. Then you're going to add your fixed assets sold at book value. Sometimes they will provide you with the information. Sometimes you have to go find the book value. So again, you take the fixed assets at the end of this year plus the depreciation for the year that you will find in the income statement, plus the fixed assets sold at book value. Sometimes they will provide you with that, and then you can minus the fixed asset at the beginning of the year. So, and then you will get your fixed assets purchased. And that is the 5 notes. If we quickly go to the cash flow statement itself, and I want you to get a highlighter or a marking pen, because I said there's 4 sectors. Number 1, cash flow from operating activities is the first part. The second part is the cash flow from investing activities. The third part is the financing activities, and then the last part is the net change in cash and cash equivalents. Now, if we take operating activities, now please mark that A as highlight that letter A. It consists out of the following: cash generated from operations, and you will find that in note number 1. Interest paid, you will find that in the income statement, but remember it was also part of note number 1. Dividends paid comes from note number 3, and income tax paid comes from note number 4. So if you add and minus all of that, you will get the cash flow from operating activities, that is letter A. Then investing activities focus on buying and selling of fixed assets and the increasing and decreasing of investments, that is your fixed deposit, that is the letter E. So the cash flow from investing activities, mark that E as important because it consists out of the following: the purchase of fixed assets, and please, that comes from note number 5 that you have calculated. Proceeds from sale of fixed assets, but remember it's against carry value, and it will always be positive. But now, the increase of investment and a decrease of investment. Remember, the brackets are important. Now, if your fixed deposit is going to increase, you had 10,000 last year, now it's 20,000. So the fixed deposit did increase, but what happened to the money? It decreased. There was an outflow. So if the investment, that is your fixed deposit, is increasing, it will always be negative because your money went out of your company. The third part is the financing activities, and that's the following. That's where you're going to get funded through loans and capital. Issuing of shares, repurchase of shares, obtaining a loan, or repayment of a loan. So the letter G consists out of the following. Proceeds from shares issued. Remember, you are issuing shares, so therefore it's an inflow of money. If you bought shares, then it's going to be negative. That's going to be in brackets. And then your long-term loan. So if you paid your loan, that means there's an outflow of money. It's going to be negative. But if you obtained a loan, if you received a loan from the bank, there's an inflow of money, so it will always be positive. So the letter G consists out of your shares issued, your shares purchased, as well as either receiving or paying off a loan. Then, number 4, the net change in cash and cash equivalents. You can either get it with the following formula. You can take it either the cash at the beginning of the year and the cash at the end of the year. So that letter K equals L plus M. But to check if your calculations is correct, you can take the amounts from the letter A minus the letter E plus the letter G, and you will get the letter K. So you take the cash flow from operating activities minus the cash flow from investing activities plus the cash flow from financing activities, and you will get the net change in cash and cash equivalents. I'm going to do question 4, but only the cash flow. They said to you at question 4, and please turn to the question paper. At question 4, they said Mani Traders is a company registered on the JSE with an authorized share capital of 750,000 ordinary shares. The financial year ended on 31st May 2019. 4.1. Fill in the missing amounts in the note cash generated from operations for the cash flow statement on 31st of May 2019. So what did they want you to do is note number 1. 4.2. Complete the cash flow on 31st of May 2019. Show all working, so you must show all your things in brackets. Now I'm first going to do note number 1. So where are you going to find the information? You're going to find it in the income statement, that is information B, and in the information A, the balance sheet. As you can see there, the balance sheet, there are 2 years because we want to see what is the flow between the 2 years. So you will get your information from A and B. If you look there on the memo, the net profit before income tax. Now, they've provided in the income statement net profit after tax and the tax. So you want to find the net profit before tax. Therefore, you have to add the two together. So you take net profit after tax plus the tax, and you will get that 998,000. Again, the net profit before income tax you will find in the income statement. Then the adjustments. Remember, you are adding two things. Number 1, depreciation, and number 2, interest expense. Now the depreciation was given to you, so it was there in bold, so it's nothing to find. Interest expense, you can find it in the income statement. So if you take the 998,000 plus the 298,000 plus the 122,000, you get 18000. So that is the first part. The second part, changes in working capital. Now, the wording is also important, as well as the amounts and the brackets. As I said to you previously, if there's an increase in inventory, it's going to be shown in brackets. If there's an increase in debtors, it will also be shown in brackets. Now, increase in inventories, where are you going to find that? That will be in information A. Now, in information A, they said to you with the inventories in 2018, it's 234,000, as you can see there. But it moved to 321,000. That means it's an increase, but the money went out of your business. Therefore, it will be in brackets. So even though it's an increase, your money went out of the business. The debtors. They gave you trade debtors. That is the 108,800. And now in 2019, it's 151,000. That means more people bought on credit. You sold on credit. That means you did not get any money in actually. Therefore, it's going to be negative. Then the creditors was provided for you, so it's nothing to work out. So if you take the 87,000 plus the 42,200 plus the 41,100, you will get that 1,247,700 if you take the 1,418,000 minus the 170,300. So again, you will find the first part in the income statement. The second part, the changes in working capital, you will find in the balance sheet. And remember, you need to know the format of the notes. They will not provide you with the format in the exam. You will need to study this. And again, the wording is important. Sometimes you will get a mark for, let's say, increase in inventories. So if you worked it out correctly, let's say you have got 87,000 rand, but they say there at the bottom, must use brackets correctly to earn the marks. Okay, sometimes we are lenient when we are in school, but they say there, they should be using the brackets correctly. So the amount can be correct, but if you don't show it in brackets, they're not going to mark that correct. That was 4.1. 4.2. Complete the cash flow statement, show all workings. I'm going to do it step by step in those 4 phases. Number 1, and I want you to take out a pen so that you can mark this. We want to find out the cash effects of operating activities. And that 316220, mark it as A, the letter A. Now, it consists out of the following, and again, you need to study the format of the cash flow. The first one we already did. Cash generated from operations. That comes from note number 1. So you just transfer the amount as it is. The second one is always interest paid. Because you've paid interest, it's an outflow of money. Therefore, it's going to be negative. Where will you find the amount? Either in note number 1 and in the income statement. And it's negative. Then the third line is income tax paid. Now, income tax paid, that 2280, that is the balance at the beginning of the year. plus the 299,400. That is the total tax that you owe for the year, that you will get in your income statement. The 7640 is the amount that is due at the end of the year, and you get 289,480. There's another line that you can also add. If you set positive 2280 minus 299,400 plus 7640, it will be the same. So again, you can take 2280 minus the 299,400 plus the 7640, and you will still get the same answer, and it should be in brackets. The dividends paid, that 150,000 that you see there, and dividends paid, as I said, comes from your current liabilities, shareholders for dividends. 2018 you owed 150,000 rand. So when are you going to pay it? This year. So therefore it is 150,000 that you've owed last year, but when are you paying it? This year. The 390,000. Now we have to go to information C. They said to you the following: the ordinary shares in issue on the 1st of June 2018 gives you 520,000 shares. You've bought additional shares, or you issued shares on the 1st of March 2019. You also repurchased shares on 30 May 2019. Now they said to you, an interim dividend of 75 cents per share was paid on the 31st of December 2018. Now the dates are important. It is before March. So before March, you still had 520,000 shares. How much did you pay? 75 cents per share. So to get to the 390,000, you're going to take the 520,000 shares, times that by 75 cents, and you get 390,000 rand. So in total, the dividends that you've paid is 150,000. Remember, it's the amount from the previous year, plus the interim dividend, and that equals to 520,000 rand. Why aren't I using the 288,000? Because you only declared it now, but when are you going to pay it? Next year. Now, the fixed assets purchase, or the cash effects of investing activities. We start with fixed asset purchase. Now I'm going to read there to you, and you will find the information in A as well as in D. At D, they said to you, all the equipment with a combined carry value of 385,000 was sold during the financial year. So they gave you the carry value of the one that you've sold. Number 2, additional equipment were purchased to replace the item sold. Did they give you an amount? No, they didn't. No other assets were bought or sold. So only equipment was bought, but we don't know the amount. So we have to figure that one out. But they gave you the following information. At A, fixed assets at carry value. Beginning of the year, end of the year. At B, they gave you depreciation. At D, they gave you carry value. Now remember 5 minutes ago, I gave you a formula. Now you have to use that formula. It's the following. It's again the amount due at the end of this year. So you take 2019's amount, the 4707,500. The second thing that you add is depreciation. They gave you depreciation in the income statement. Then you have to add back the carry value that was given to you in information D, that is the 385,000. And I said to you, you minus the beginning of the year balance, and that is the 4409,820. If you want to put it in a T account, you are most welcome, and you get 980,680, and it's negative because what did you do? You have bought equipment. The second one, proceeds from disposal of fixed assets. It was given to you in information D, the first one. It's the 385,000. Then decrease in fixed deposit. It was provided. There's nothing to work out. So if we take the 980,680, that's negative, plus the 385 and the 50,000, you will get that amount 565,680, and mark that as the letter B. So the cash effects of investing activities, the 565,680 is negative, and please mark it as the letter B. Then the cash effects of financing activities. It was given to you. It was in bold, so it's provided. Please mark it as the letter C. So the 159,000 was given. Now, the first one there, proceeds from shares issued. Now we have to go to information C. At information C, they said to you at the second one, additional shares issued on the 1st of March at R7.20 each, 120,000 shares. Now we can work out the value. So the value is then 120,000 shares times R7.20, and it gives you 864,000. Then the funds issued to repurchase the shares. Now if we go to information C, they said to you the following: the ordinary share repurchase. They just gave you the number of shares. They didn't say what was the price per share. So we don't know yet what's going to happen, so we leave it out. I will tell you now how they got to the 525. Then the loan. The loan you will find in information A. So if we go to loan, Olney Bank, in 2018 it was 1.2 million rand. In 2019 it is R1 million. So what happened to the loan? It decreased. So if there is a decrease in loan, it is negative. So the loan is negative. So now we still have to find the funds issued to the shares that you've bought. Now it's easy. They gave you the 159,000. We have worked out that our shares issued is 864,000. We don't know what is the price of the repurchase. That will be the balancing figure. But we have a decrease in the loan of 200,000. So what can you do? You can take the 864,000, that is positive. You're going to minus the 200,000, and you're going to minus the answer of 159,000, and then you will get the balancing figure of 525,000 rand. So even if you made a mistake, let's say with the loan, you will still get your marks even though the calculation is now wrong, the calculation is correct, but the balancing figure is wrong. So you can still get your marks even if the loan was incorrect. So the letter C is then 159,000. Then the fourth part is your net change in cash and cash equivalents. That is actually note number 2 of the cash flow statement. Now, I'm first starting with the opening balance there. And remember, you will get it in the balance sheet, this information. So the opening balance was given to you as you look there in cash and cash equivalents. In 2018, it was 98,600. So that's easy. But at the end of the year, your cash and cash equivalents has an amount of 3,000 rand. But there was a bank overdraft. So you have a positive amount and you've got a negative amount. So 3,000 rand was positive. But the bank overdraft was negative. That is 14,860. So in total at the end of the year, you actually have a negative amount for your cash. That is 11,860. But now, at the beginning of the year, you had 98,600. You have now a negative amount of 11,860. So therefore, your cash went from 98,600 then to 0 and then a further 11,860. So your cash decreased with 110,640, and that is your net change in cash and cash equivalents. Again, you have a positive of 98,600. Now you have a negative 11,860. So the cash moved from a positive 98,600 to 0 because you don't have anything now in the bank, and then a further 11,860. That means your money decreased in total with 110,460. Now you can check your answers. If you take the letter A, 316,220, minus B in this case, 565,680, plus the letter C that I gave you, 139,000. So the letter A, as I said, is cash effects of operating activities. You're going to minus the cash effects of investing activities, the 565,680. Then you're going to add number C, that is the cash effects of financing activities. And then you will get the net change in cash and cash equivalents. That is the second one that to check your answer. You can phone in or WhatsApp your questions. We will answer that in the next 5 minutes. I just want to go to the ratios. And again, the ratios I will explain the last session of this work, but I just want to prepare you for that so long, because the ratios and the analysis, that's the same, is always with the cash flow statement. Now, I want you to, if you go through the paper, there are always steps regarding financial indicators. First of all, you have to consider what the question is asking you to analyze. For example, liquidity. Then you have to decide on the relevant financial indicator. Number 2, you have to name the financial indicator, give figures, because they would always say provide evidence, and that is the figures, and then compare this year with the previous year. Remember, in grade 12 you get a formula sheet, but it doesn't help if you have a formula sheet and you don't know the formulas. So please go study the formulas, and that is on page 49 of Mind the Gap. And from number 14 onwards, 14 to 19, it's only grade 12 work, it's the new ones. From number 1 to number 13 on page 49, that is grade 10 and grade 11 work. So a cash flow statement can count up to 40 marks or 50. And then the rest of this question can be ratios, as well as the interpretation of that, and therefore another 30 marks. Please don't just leave it open, because remember, the cash flow, the income statement, as well as the balance sheet forms part of paper 1. So it's all study work. So are we ready with questions?
Yes, it's 7 minutes to before 7 o'clock. It's it's 7 minutes to before 7 o'clock. It's when I'm in 2 tier to high mono caramella the puts our fella who's 072-839-0427. Into one like put happy 072-839-0427. Into one like a keep work and limit. Could you please ask any question that you want to ask? There's a number 072-839-0427. Is there any other words you would like to say before I let you go?
We are doing the production on Wednesday morning, so we will work with the national paper from 2019 May, June. So please get that ready. It's production cost. That is the May, June 2019 national paper. That is the one that the rewrote candidates write. So please get that questions ready.
Thank you, sir. Thank you very much. Till we meet again. Thank you. Ntumelle hle wana skolo ke tswele mona pele ke re wena ba ba ntumelle ke re fela re ka dimepene le buka hle ho fitla re kopana hape nakong e tlang ka tsena tsa skolo.